Oh, and welcome back, all you capitalist pigs. Jason Stapleton here, and welcome back to the Forex Market Preview, another installment. Getting out a little bit later today than I had planned, and I apologize for that, but we are rocking and rolling now, so I'm going to get right to it so we got some things we got to talk about. I'm on a different platform today. Those of you who are used to seeing the eSignal, the old eSignal platform, I'm actually on the new one, and I'm going to try it out today. You guys tell me what you think. It's not that big a deal. The first thing that I want to showcase to you, this is actually something that this is just more evidence of what we do and the fact that what we do works. But this is something that went out to syndicate members. Syndicate members have been waiting a long time on this one. I mean, we've been, it's been bloody, the wait that we've had to make to see if this thing was going to pop or not, and it did. And what we've got, guys, is a Gartley pattern, a very deep Gartley pattern here. And as I take a look at this, and I draw this in, if I go ahead and draw these lines down in here, you'll see the Gartley pattern formation. Now, I'm bringing my Fibonacci retracement. This Fibonacci retracement came in rather low, right around the 886. Let me bring in my 886 here. Close. We were buying these up at the 886. Boom, right there around, this is 99.63. I don't know if you can see that purple very well. And as you can see, guys, traded sideways to slightly down for quite a while, and then bam, got a nice little pop. The market pulled back down in. If I go to a 4-hour chart, we'll probably see it even clearer. We had the resistance level right here. Market was finding resistance there, couldn't get over it, and then boom, we rally above, we come back down. Where do we come into? Previous structure resistance now becomes support, and now the market's starting to rally here. So a very, very nice trading opportunity here, a lot of opportunity. We've got a significant upside potential here. Now, this is a daily chart, which means we're looking for, a significant move, and we've seen part of that already, but the 618, let me go ahead and bring in my Fibonacci retracements here, so we can look at where this market is likely to go. Swing high to swing low. Again, resistance at the 618. We got a 382. As I look at this, I'll go ahead and collapse my chart up here a little bit, see if I can get any more data. There is some there, isn't there? Hang on a minute. Right at about the 382, looking left, you have resistance. Let me widen this out for you guys. You have resistance, support, 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 support. Major shelf right there at the 382. So initial targets there, 382 retracement, about 101.53 or so. Get right underneath that, 101.49, let's call it. Boom, right about there. And again, buying them up down here around the 886, 99.60s area. Nice little pop there to target 1. Target 2, you can go ahead and you can see you've got a couple of different options here. I will normally take target 2 right there at the 618. Okay. You have resistance coming in right there as well. You also have resistance up here at the 786. So you have an option here as the market rallies to say, hey, if I hit target 1, stops of course, then go to break even, maybe run in trail. You have a 618 retracement here, so you have the option to say, well, okay, am I going to take my profits at the 618 or am I going to trail aggressively after the 618? And you need to define what aggressively is. What does that mean to trail aggressively? But once you've determined, yes, I am going to trail my stops because I'm going to look for this 618 retracement, or I'm going to look at new structure highs, and I'm just going to continue to ride this wave. Because what do we have here, guys? We have a lot of consolidation here, but the market has been expanding, and then we've been basically trading inside of this range here. So if we expand here, there's a pretty good chance that the market will see new structure highs. I don't know that that will happen. I'm just saying that there is a likelihood that that may happen if this market continues to rally and continues to expand. So you may want to try and hang on and capture as much of that profit as you can. There's two different ways to trade these ratios. One is to go have assigned targets, and the second one is just to run and trail. So I'm going to leave that to you guys. Let's drop over to the euro here for a minute. I want to show you guys what happened here. I'm watching this on a lower time frame as well, on an hourly chart as well. But you can see market broke structure here. Let me bring this down. Market had a resistance level here, and we are on a daily chart again. Resistance level here. Then the market broke out. Market broke out to the upside. Break above, close above the previous high. Those of you who were in the ratio trading webinar that I did the other day, the closed door webinar, know exactly what I'm talking about here. Break above, close above, right there. Market then pulls back. Where do we pull back to? Previous structure support. Now proving to be some resistance. If I bring over an hour, let's drop this down to an hourly. 60 minute. Be able to see this a little bit more clearly. See the shelf that we were on? Market broke down, immediately came back. Now we're coming back down into test previous structure support. Certainly an indication here on the daily chart that the market is going to go higher. The stops, guys, have got to go underneath here. If you're long right now, your stops got to go underneath there. Now what are you looking for here? Back out on the daily chart. Got our stops in place. Your stops don't have to go all the way back down here because the market on the hourly chart's made a lower low. Now you can have them, if you're looking for wider targets, you can have your stops all the way under here. I'm just saying, if we're looking at this on a lower time frame, on perhaps a trading time frame, you don't always have to have them way back down here. This little lip will oftentimes be enough. But what we're looking for is some trend continuation here. Let me draw in a Fibonacci retracement. Let me see what we got here. No. We have potentially a harmonic pattern setting up here. AB equals CD. Okay. Bring in my Fibonacci extension. Swing low to swing high. And back down in. Look at what happens. Right there about the 618, or excuse me, the 1618, we're going to have that ABCD or that harmonic move completing. Let me draw in another. We're going to draw in a Fibonacci retracement from the swing high to swing low. Look at what happens. 618, 1618, ratio extension and Fibonacci retracement coming into confluence right there around 136.30. Let's draw in a line near that point. We look left. Get a little bit of support here, a little bit of resistance there. Let's continue to look. Is there anything else back there? A little bit. Not a lot, but a little bit. We can kind of adjust this line here a little bit. Find resistance, resistance, resistance. Certainly, yeah, there's some action there. Resistance, support, support. Market's still respecting that area. So again, possibilities, opportunity to potentially short 618, absolutely. Be watching 136s, guys, 136s. If the market breaks structure and starts to head higher, if you're long, because there is an opportunity to get long here, as we already talked about. Those of you who were part of the closed door session that I held last week, break above, close above, followed by a retest, previous structure, support, resistance, now becomes support, stops below the previous swing low. What are we looking for? A press up into a harmonic move, Fibonacci and ratio and structure confluence. What's our risk? We got long here. There's our potential reward. This is our risk. And again, like I said, you can chop that risk a little bit if you want to, but what do we have here? About almost a 2-to-1, about a 1.5 to 1 risk profile. All right, sorry about that. I actually had a phone call with Todd. We've got something really cool that we're working on that I cannot disclose to you at this time. So it took me a lot longer than I wanted to have that conversation, but let me just say this. Those of you who get contacted on this, you're going to want to call me back. So anyway, let's see here. I'm not sure if I'm going to send you guys a letter or if I'm going to call you on the phone or what I'm going to do, but yeah, you're going to want to talk to me. Let me see here. Pound yen. All of this stuff is showing, again, even with pound yen, break a structure, break above, close above. Market comes back down in. Where are we likely to go? Let's grab our Fibonacci extension. Swing low to swing, oops, wrong tool. Swing low to swing high, back down in. Bam, right there. Let's go ahead and grab our line tool. Let's get our right about there. 1414 is where that comes in at. 1414, guys, the minor Fibonacci retracement or Fibonacci extension level, and look at what happens right at 1414. Right about there. Look left. Look at that structure. Structure actually comes in just a little above, right about there. Support, resistance, support. So pound yen looking to go to 104.37. Again, opportunities to buy. But that's going to do it. I even got more people calling me now. It is a busy Monday morning, people. I'm sorry about this. I'm going to go ahead and stop the video because we're running about 10 minutes now. I will have this out to you just as soon as I can. But again, Canada proving the Gartley patterns, paying off big dividends. You're looking now euro-yen potential trade setup. This is actually an advanced pattern as well. Right there. That's setting up potential sell. And then, of course, Euro USD going right back to that one. Potential rally here up into that 618, 1618 ratio extension with structure, support, and resistance. So until next time, guys, good luck and good trading. I'll see you next week. I'll talk to you soon.